obviously you can see, have I attached the red line to the bottom dot here, yes or no? And have I attached the red line to the top dot here, yes or no? So in other words, the anchoring is now complete for that swing, isn't it? This is the lowest low we had, and this is the highest high we had here. So that's the relevant swing we're now anchoring it to, right? So we're anchoring against the last buy side swing, and it's a good buy side swing to anchor to because it's came from the US session. It's included the Brent session as well, Brent Open. And obviously now we're trying to figure out whether we've got any buy side value. Now we talked about this buy trade here, the buy trade here as well. We didn't really start generating any premium priced on oil, did we? Well, we didn't until we came into the grey box. The grey box is, of course, the NYMEX Open. And when we came into the grey box and we start to trade into, now that you see where the value is, right? So the value inside the grey box, I'll just draw on the screen so that it's now static, so that when we change this view, we don't lose sight of where that red line value is inside the grey box, right? So when we zoom into the price now on oil, can we now recognize the high price on these two occasions here and another high price there, yeah? So now we've got level 2 liquidity. We've now got liquidity pools that can allow us, if we're so inclined, to now try and trade into that premium. So obviously when we trade into that premium, the price was either going to be a sell above 84.20s or a sell above 84.10s. So we have to now make that choice. Now, bearing in mind, it is the NYMEX Open. Bearing in mind, I do want to try and get some business on this. So with the NYMEX Open, I want to try and get some business on this. Then this would make a lot of sense, right? This would make a lot of sense in terms of trying to figure out what I'm going to do here. Now, obviously, we've got other ways we can start exploring this. We can start looking at inflation break-evens. We can see whether the inflation break-evens are with us or against us. And obviously, with a lot of spike noise coming in here, but you can see what happened with the bonds. We managed to get a bit of value on that as a sell trade against the bond market as well. Managed to get a bit of sell value against the bond market as well, didn't we? So the two key drivers at this stage would obviously be bonds because of the CPI numbers. I'm not really interested in the dollar at this stage, Rafe, because it's the CPI number. So it's really a bond trade, and the dollar will go where the bond goes at this stage. So we want to try and get that play on the books now. We want to try and get that short sell on oil on the books. And obviously the short sell, the reason why I say that is because the dollar doesn't change because of what oil does, right? The dollar valuation doesn't change because of what oil does. But the bonds do. The bonds have a two-way feed. So if the bond's going a lot higher, it's because they think, obviously, that oil will be going down. If bonds are going down, it's because they think oil will be going higher, and so on. You know, we get this feedback loop of information coming from the inflation space. Still got nothing to do with the dollar. And obviously, the calendar spread is always dollar related. Always dollar related. It's always oil related. So these are the two lines I want to try and get in my favor initially, at least in this phase. I want to be short oil. I want to be selling into level 2s. And the main one, of course, isn't the bond. I mean, we don't even have to look at the bond at this stage. We don't have to look at the bond. We do need to make sure that red line has a premium. It does have a premium. I like the sell. Whether it's going to go below the bottom edge at this stage, I don't know. But if at the bottom edge is down here at 60 and 70s, and I can sell at 10s, it's a good winning bit of business, right? So obviously, sell side for me, sell side only, and we have achieved our target price. The value is not improved. The value didn't improve much. I don't think it's going to be something I want to be selling down at $83.60 or $83.50. I don't see that as a trade. So I'm happy to book money when it trades into that liquidity pool. And if the value stays, now obviously we can re-anchor the value. If we wanted to go into the micro world of the cash open from the high swing to the low swing, we can go back to the cash open and high swing to the low swing, and I can re-anchor based on high swing, low swing narratives, right? So to do that, you simply find the high swing, you find the value low swing, you find the price low swing, and you re-anchor it accordingly. So if I re-anchor this, you can see that I start to end up with a big discount price. So now you know why. Now you know why I start booking my monies. I start ending up with a big discount price on oil versus the fact that we had that spike coming in. Now, obviously, this line on a 1 minute chart before the NYMEX open is a little bit, we know is a little bit ropey, right? We know it's not the most accurate because a lot of people don't trade December and September contracts at this time of the day. You know, so this line only really becomes more accurate in the 1 minute chart when we get into the NYMEX session proper, so 2 o'clock onwards. But on a 5 minute chart, 15 minute chart, 30 minute chart, I think it's perfectly accurate to be able to use this line. Perfectly accurate to use this line. And I like it. I like the storyline. I like the top edge. I like getting short into that top edge price. I think there was value in it. Doesn't matter where we anchor it. There was value for the short. I don't think there's a lot of value for the short at the moment. And that's why I booked my profits. And I'll be looking for new opportunities. So when do we re-anchor it? We re-anchor it whenever we like. When do we re-anchor it? You can anchor it on the current swing. I don't actually like anchoring on the current swing. I like to anchor against the previous swing because the current swing you're going to be adjusting every few seconds, right? But obviously you'll recognize that micro value just by looking at the chart. You can see micro value by simply just paying attention to the screens themselves. But when we look at the overall shape of this, the anchoring that I'm using is the swing low, swing high narrative. There's the swing low there. So that's what I'm anchoring against. So when I'm trying to anchor this, I'm wanting to put that red line on the dot price, on the dot. The red line's on the dot there, but the red line there is on the dot here. So what does that mean? So if I keep the anchoring the same, if you move it, of course, and it starts to re-anchor itself, you have to make an adjustment. You have to make an adjustment. You have to bring that adjustment back into play. And if the price is still too wide, you have to narrow the price back in again. And now you can see that we're back to the anchoring process. You can see we've got a lot of premium as we go up to the 84s now. We've got a lot of premium as we go up to 84s, yeah? And, you know, if that premium stays in place as we go up to 84s, guess what? I'll be selling at 84s. I'll be selling 84 offers, right? I'll be going offer watch 84 plus, and we'll take the market sell side only. Yeah, the red line's the calendar. Yeah, the red line's always going to be the calendar on these oil charts. Yeah, great trade, isn't it? A very, very good trade. And when we see that, that's how we came up with that $85 valuation last night, wasn't it? That's how we came up with an $85 valuation against fair value, because you're just re-anchoring the spreads. You're re-anchoring the spread and you're making an assessment against that anchoring process. Now, you obviously make assumptions that everybody does that anyway, but of course, perhaps people forgot to do it. Perhaps people forget to do the re-anchoring parts to these as narratives. Now, we can always re-anchor at any stage by simply double clicking. You know, when you go along on a screen, the red line, if it's no scale, will automatically re-anchor. Do you see that? The red line will automatically re-anchor because there's no scale on the red line. The price won't, because the price is on a scale. If you want to re-anchor the scale, double click the price, and now it re-anchors the scale against the price that's visible. And from that, you can then see what the current premium or discount price is. In other words, if you wanted to trade that in the direction of the red money, you had a premium price here, yes or no? Now, you might say, well, we don't know that because, you know, that's not the anchoring point, because if we had to re-anchor that at that stage, it might be looking different. Well, we don't have to do that, do we? It's not going to look any different because the red line's going down and the price is going up. So, of course, it's going to be different. Of course, it's going to be a premium. It may not be a premium on a longer-term chart, but of course, there's going to be a premium on it on that short-term chart, right? There's no question about it. It doesn't matter how many times I anchor it, and it doesn't matter where I anchor it to. The price on those three candles went up, and the price on those three candles on the calendar went down. It has to be a premium. It might only be a premium for 15 minutes, but for 15 minutes, it's got to be a premium, yes or no? And as I said, I'm not saying that there's a premium on a macro chart, but we don't have to re-anchor four candles. We don't have to re-anchor those because we see them. I hope we see them. And if we see them, do we all agree that this is a no-brainer sell? Do we all agree that that's a no-brainer sell? Because this is not This is not going to be a macro price level, is it? Where are the macro price levels at that stage there when I'm looking to sell that oil? Where are the macro price levels? There are only two macro price levels that I need to really worry about where the macro is. The macro price level would be up here, right? And the macro price level would be the day swing low at this stage. So the day swing low is down here. So there's the two places that I would want to re-anchor my macros. Yes? Well, this isn't a macro trade. This is an inside market trade. It's got nothing to do with macro narratives. Do you agree with that? It's got nothing to do with macro narratives because there is no macro price. The only time we need to bother what the macro is doing is when we're in a macro price area, right? Cash opens, cash closes, you might say is a macro price. Yeah, but we still have to get a macro price. So we're trading bottom edges and the big commercials come in at lower prices because there's macro value. They're not going to come in at higher prices because they're macro value. They're going to try and wait for the sweep lower and then get the macro value of the bottom edge price. Macro value is at macro price levels. Day swing highs, day swing lows. Session highs, session lows. Otherwise, it's micro value. Otherwise, we're interested in what the micro's telling us. Not an awful lot else. And then when it comes down into the swing low, we then make a macro valuation, don't we? And my macro valuation was I want to take my money off. Well, that was a good decision, wasn't it? Because it's bounced off the 60s. Exactly as we would have thought it would be because we made a macro valuation. We thought we had a bit of a discount price at 60. So because we've got a discount price at 60, I don't want to be short. I'll make $500, top tick the sell, bottom tick the exit. And that was easy. Comprende? Comprende.